It's about that time of day again here, boys and girls. Welcome back, welcome back. Newsletter time, JJ here. SchoolOfTrade.com, SidewaysMarkets.com is our trading blog address. This is your nightly newsletter. It's Wednesday evening, January 21st, 2015, the 21st day of the first month of the year 2015. And boy, what a great day we had today. I hope you took my advice, got long on gold, right? Had some great selling opportunities. We literally had our pick of the litter. Whether you traded gold, crude, or Russell, as long as you followed last night's newsletter, you had all the ammunition you needed. And if you weren't able to profit today, remember, you don't need to do this on your own. Come out and join me tomorrow morning in our live trade room, and I'll walk you right through all of this in real time. All right, guys, we have a jam-packed newsletter for you guys on this Wednesday evening that kind of feels like a Tuesday because we had that Monday holiday. All right, before we jump into the charts for today, I want to remind you guys, make sure you're watching the video right now over on our trading blog at SidewaysMarkets.com. Make sure you're watching that video on our trading blog. If you're watching on the YouTube page right now, there's a link right below the video on the YouTube page, and that'll take you over to our blog. There are 3 important reasons why I think you should be interested in watching this video on our blog. The first thing is you can download all my charts. All the charts I'm going to go over with you guys this evening, you can download all those charts right below the video. Second thing, upper left-hand corner, I've got a special free pass for anyone who is not a member yet of School of Trade, but would like to see what it feels like to be in our live trade room. If you're not a member of School of Trade, I can't imagine why not, right? We're the longest running trading education site, most successful trade room on the planet. I want to show you why. I want to show you what everyone's talking about. Grab that free pass in the upper left-hand corner. Come out and join our trade room here this week. And then third thing, that's right, there were 3 things. Third thing, our nightly newsletter mailing list. Want to encourage you guys to give me your name and your email address, and I'm going to send you an email every evening. I promise I will not spam you. I'll just send you that nightly newsletter every evening when it goes up. So guys, 3 things on our blog here this evening. Download today's charts. You can use those wherever you happen to be trading tomorrow. Grab your free pass. Come out and join us in our trade room as a guest. And last but not least, register for our nightly newsletter mailing list. Guys, if you register for the mailing list or if you grab your free pass, make sure you check your email. I'm going to send you a verification email to make sure I have the correct address and make sure you're not a robot. All right, guys? Check that email, check that spam, that junk folder, right? All the above. Looking good, looking good. Stretch it out, right? Make sure you're well hydrated for tonight's newsletter. We get a doozy for you. Let's rock and roll. Starting here first this evening with that mighty mini Russell. Boy, we nailed the trading range. Pretty much nothing more than a range-bound session here today on the Russell. Looking at this anchor chart, my slowest of the anchor charts here on the Russell, we can see the Russell is definitely bearish. We've recently had some lower lows, some lower highs, so we're definitely on the bearish side. But, you know, I'd be lying to you if I said we weren't trading in a very narrow, well-defined trading range. So the way that we treat this is we say, okay, we know the trend is down. That tells me what direction to be looking, right? Downtrend, I want to be a seller. Then the next step is I identify where I'd like to look for selling opportunities. Where do you think we could get short? Any of these levels overhead, right? Any of these red resistance areas overhead, right? So we got 1172, 1177, 1179, 1186, 1199, right? So on and so forth. So probably not going to get it too far higher here, but hey, if we end up into that range high, we'll be selling those highs. Okay, so downtrend, stay to the short side, inside that range, sell the highs of the range. And don't forget, just because if we happen to break above the highs of that range, that is still a wonderful opportunity there to keep selling. So we won't mind at all if it goes up a little bit here tomorrow and gives us a chance to get short off those highs. What if the price doesn't go higher? What if it goes sideways? If it goes sideways, we're going to find those short-term ranges, and we're going to keep selling the high. So if we don't get all the way up to the high of this range, if we create a new range tomorrow, we'll keep selling the highs of that range. What if we just go lower? If we go lower, look for a wave pattern short, look for a continuation pattern short. Just make sure you get into that short below 1157.5. Whatever you do, don't make that critical rookie mistake where you get faked out. You try selling above that low, and it goes right back up against you. So just make sure if you're going to sell short with a new lower low, make sure you do so below that low, right? Below that low. Don't sell into support. And then you got targets below waiting for you here, 47.9, 40.2, 29.1. That's going to be a measured move target all the way down at the lows. Okay? Don't say I didn't warn you. Russell's bearish with that range-bound market. Here's a great chart in this Russell. Here's a great chart in this Russell. Boy, you got those real thin, almost non-existent clouds on here. Lower highs, higher lows. If we didn't see the larger chart, this looks completely sideways, right? Honestly, the only reason that this chart really gives us a bearish look, two reasons. Well, same reason two times. Fake break at the high, fake break at the high, right? We saw this on Crude a couple times today where it just got a little bit perky, tried to go higher, and then bam, gets smacked right back down. That's a classic scenario for just overall long-term downtrend, right? So those two little examples there where we kind of poked our head out and then got crushed and basically just sunk right back down to those lows. The buyers have tried, but they keep failing. So this tells me, again, just kind of looking at those little fake breaks of the highs, we did get a lower low there. I would have much rather have had a lower low from there. I would have loved to have a little bit lower low there. Didn't get a lower low there. So we're definitely, again, we know from that prior chart, we're definitely bearish. We are definitely trading sideways on this chart. Flat moving averages, really no cloud at all, right? The color between the moving averages. Double tops, triple bottoms. I mean, boy, you can look at it. It's got that megaphone again, right? This Russell's been giving us just a bouquet of range-bound opportunities, but the megaphone this year, we've seen 3 megaphones in January on the Russell. Remember 2 weeks ago, was it a week and a half ago? We had 3 days back to back to back with megaphones. Incredible stuff. This is a very rare pattern. So definitely sell the highs. That's going to be your best bet. You can buy the lows, but just remember, in this trading range, right? So whenever I find myself in a trading range like this, I know I can buy the lows and I can sell the highs. We're going to err on the side of bearish, sell the highs, right? Because we know what the long-term trend looks like. So we know we got some easy opportunities here. 1170, 1172, 1174, 1178.5, right? As we go lower here, I've got targets 56.6, 50.7, 47.9, 39.4. Okay, get a measured move target, 50.7, right? That'll be your meat and potatoes there. Key component on this Russell, trading sideways, stay to the bear side, keep selling those highs. Looking good, looking good. And then here's my price action chart. Not a lot has changed on this chart from today and yesterday. If you watched last night's newsletter, probably say, boy, this looks like the same exact chart. And it is. It's very similar to it. We've got that sideways range. This is a little bit of noise down here. I had to adjust that trend line off these lows here, right? The trend line being drawn like this just doesn't make much sense, right? Not a very good trend line there because you're going to skip over those other prior swings. So I would say this trend line is looking good there. Can't draw it there. 1, 2, 3, right? So there is trend line low, trend line high. I believe this comes all the way back. Yeah, that goes a little bit further back, as you can see. Okay, so bottom line, price action on the Russell is clearly on a sideways kind of tear here right now. Again, we know the long-term trend though being down, so we're going to try to sell those highs. I would recommend selling the highs as the higher percentage trades, but you can see right now though, boy, I'll tell you, you look at this chart, if you didn't know what we saw earlier, and I tend to advise my students to think like that, let this chart tell you what it's telling you. Right? Don't let the other time frame charts that I've shown you bleed over into this and cloud your judgment, right? Take a unique snapshot of this market. What are you seeing? Nothing but sideways as far as I'm concerned. So on this chart, again, if I have selective memory, I forget about what that 32 long term is telling me. You already know my plan. I think it's best to sell these highs. And you'll see there's going to be a few options overhead here. Now, obviously, if you can sell those highs, right, take your profit down at the low of the trend line, right, take your profit at these many buy zones here on the way down. If we go lower here, though, you'll probably get a chance to take a few nibbles here buying these lows. So don't be afraid to take a nibble at the lows here buying these lows. Just be aware you are going counter trend in the long term. So what that tells me is take a quick first profit target, move that stop up, okay, either to your point of entry or at least to cover so that if it does roll over and go lower, you don't get a loss out of the trade. So basically, take your money quickly, protect your capital quickly, and see if you can hold it up to that high, right? So buy that low, hold it up to that high. But again, just don't be surprised if we go lower, we see a little bit of a move and then right back down as we follow that long-term trend. So stay to the side of the bear side right now for the easy trades in the Russell, and you'll be on the right side here as far as I'm concerned. Moving forward here, how about that gold? Now, boy, I have a better chart for you than this one. Moving from the Russell to gold here, there you go. Take a peek at this chart. This is the chart that really, I think, puts this in perspective. Okay, now what's happened is the fear coming out of Asia, the fear coming out of Europe, basically the unknown of how this lower oil price is going to affect us, that's a big, big deal. Okay, the issue with Switzerland, right, and the Swissy, getting rid of that exchange rate floor, that put some fear in the markets, right? If you listen to the State of the Union last night, you might have your own fears like the rest of us. I'll leave my opinions to myself. But the reality is that we can easily see we're bullish. We're very clearly bullish. We're well overbought right now. So clearly the fear factor has really kicked in. But, I don't want to go thinking this too much, right? I don't want to overthink this. All I know right now is that we are bullish. And just glancing at this chart, that's why this chart I think is a really valuable chart. Just glancing at it, you can really see we've got more room to run, right? We are not running low on space. We've got plenty of room up to that 22. Now, remember, we're at 1291 right now. To get up to 22, right? That's going to be what, 29, almost, let's say 30 points, okay? That's a pretty big move, right? It's $3,000 per contract, right, as far as profitability goes. So we definitely have a good shake or two going higher here, still left to go. We have tested that 1,300 big round number, but that's really not that big of a deal, that big round number. The granddaddy of all big round numbers is down bottom there at 1,200. So really the scenario that I see is I see us having one of three scenarios. Scenario one, since we are so overbought here, scenario one would be we go sideways here, right? Find that range and buy the lows because you're bullish. That's scenario one. Scenario two, we continue higher highs, pull back, higher highs, pull back, and we're going to go up to that 1322.3. Scenario 2 is we keep trending higher. Scenario 3 is that finally these bulls chill out a little bit here. They're not, fine. There's nothing to be scared of out there right now, right? The fear of the unknown. Human beings will always manifest themselves to find something to be scared of, right? So we know that's probably what the case is, and who knows? Maybe they give up on this week, maybe not. Scenario 3, we collapse. We see a failed buy, and we tumble. I would definitely be looking at targets at that prior range high, and then you know where, back to 1200. Okay? So scenario 1, we go sideways, buy the lows. Scenario 2, we keep going higher, keep buying those pullbacks, just like what we did yesterday in last night's newsletter. And of course, if we happen to slip and fall, and what I've been looking for is to see some buyers start to fail. Once those buy patterns start to fail, then we know we're looking possibly for a reversal left and a collapse. Okay, so much better chart there on the gold. That will give you, in my opinion at least, that'll give you a really nice, just a little bit of awareness of the big picture. Now let's go down to the 32, right? This is the one we use most often. Gold is bullish. You'll notice we have a bull channel, right? We've broken that channel. So we should be able to retest these highs right now, right? My target would be going back up to retest that high at 1306 and a runner up here at 1319.5 and 1329. So we're definitely looking to be a buyer right now. And as you can see here, we have officially pulled back, and now we are green light time here, looking for buying triggers. Just remember, we don't just buy blindly. We wait for an entry trigger. An entry trigger allows me to do two things: confirm the buyers are in control and manage my risk. Those are the two things that are accomplished with a buy trigger. Confirm the buyers are in control and give me some levels that I can use to manage my risk and in turn my reward. So wait for the buy trigger. And if you've never learned about buy triggers, if you don't know why that's dangerous just to buy here, make sure you come out and join our trial. In that free trial, you're going to learn more in my free trial in 1 week than you will months at a paid website somewhere else. I'll tell you that much. So right now, we definitely tell we're bullish here. I've got buy zones, buy zones, buy zones. I've got swing levels, support levels, support levels. Any of these green lines, I'm going to be looking for buying opportunities. I've got targets overhead at 1302.2, 1306, 1319, and 1329. Now, we talked earlier about the fact that we are well overbought right now, and if we do happen to go up and then immediately reverse, that's what I'm talking about when I say those buyers fail. So we should be able to make it back to that high, and in all reality, we should have no problem getting up to that 1319.5. If we do struggle though, once I see that close lower, now we are officially looking for those shorts. So just be aware, okay? If we go lower, that doesn't mean I'm looking for a short now. Okay, remember, how do I put this? What's the easiest way to say this? The easiest money in day trading comes when the opposite side of the market is getting their heads taken off, right? So if I see price go higher here and then fail, okay, it's a buyer failure. But if it just keeps going lower here, I will continue to look for buying opportunities. I want to see those buyers try and fail before I call this bearish. Okay, get your plan for you in front of you there on gold. And then moving to our 16 anchor here on gold, pretty much the same thing. Pretty much the same thing. You get that target up top there, 13022, right? Pretty much the same thing. So we are wave pattern, wave pattern, wave pattern on the way up, right? Continuation pattern, continuation pattern, continuation pattern on the way up. I do think we will most likely get back to those highs here sometime tomorrow morning. I'll be waiting for the buying opportunities right now. And we got one more shot, right? So if it was happen to come down, we got one more shot here. And obviously I'll buy any of these areas here on the pullback. All right, guys, pretty much again, same thing on the 16 as we get in the 32. And then here is a very interesting chart. Here's a price action chart on the gold. Here's a very interesting chart. A couple things you can see on this. First of all, we got this kind of ugly, you'll notice that undershoot here at those highs, but only real way to draw it is off those lows. So we definitely have a bullish channel long term. We break that bull channel, which now tells us that we're going to be gunning for that 1306.2. So 1306.2 is definitely a target for those buyers. Okay, 1306.2, a definite target for those buyers to revisit that high. And if we do get back up to that 1306.2, we're probably going to have no problem getting up to that channel high as well. So just be aware, if we get back to that high, we are nothing but bulls here on the gold. Then we have this short-term down channel. You can see this is one of the better looking channels we have in this chart. Right? We broke it, retest the low, measured move. Very, very easy to see. That did its job. Right? The sellers got it out of their system. Now we reverse, bullish trend, higher highs, higher lows. I think this is the most important part of this chart. Because with this bullish short-term channel, this tells me right away I am drooling over the buys here. 1290, 1287.3, and 1285.7. If we do happen, though, if we do try to go higher and fail, I got that sell here now below that 85.7. Okay? Now remember, if you're going to be a seller right now on gold, what have I said many times? Wait for the buyers to try and fail. So if you want to be a seller, don't just sell it with a break below 85.7, right? Just you're going to give your money away to the market. Okay, that's a rookie mistake. If you're going to sell this sucker, I've really got two options to be a seller. One, if we do rifle through that 85.7 support, I'll then sell it on a retrace, making sure to sell below 85.7. I think the better trade, though, will be watching it bounce off these support levels, and then right when you see those buyers start to fail, you can hop in a little bit earlier. Okay? So we're looking to the bull side right now on the gold. This short-term bullish channel tells me look to buy at that 1290, 1287, 1285.7. You've got targets waiting for you up overhead. And if we get below that 85.7, we should be able to make that move lower down to that 1272.2. Okay, remember though, the easy money to the sell side right now on the gold is going to come after the buyers fail. Moving on from that funny yellow metal they call gold down to our black gold here, our Texas T, crude oil futures. Trading the 315 contract on crude. And like I said earlier on in our newsletter this evening, if you took my advice in last night's newsletter, you had a field day today. Every time it went up, we sold it right back down. If my memory suffices, there were 4 different examples from last night's newsletter where you literally, all you had to do was wait for a red candle and sell. I mean, it's it. It was very, very, very straightforward, very easy. We are still bearish here on crude. We're not as bearish, we're not as blatantly bearish as we'd like to be right now, but these are good examples, right? So the buyers clearly tried here, right? You see those buyers clearly tried, and they just got smacked right back down, right back into this range. So this is a classic example here of what we've been doing for the past, 3-4 months here on crude. Every time those buyers start to get a little perky, right, they try to push that price higher, we just find a resistance level overhead and we just smack that thing right back down. So keep it up, right? Don't change the strategy now. So I've got lower highs, I have lower lows. Really kind of disappointed that low right there. Didn't really make a lower low by much. It did make a little lower low, but I'm not going to call that a lower low. That's pretty much a double bottom. So you look at it this way, and you've got yourself looking like a descending triangle, right? So we're definitely looking to the bear side. We definitely want to sell, and where we want to sell, we'll sell at the highs, right? Sell at resistance. So where could I sell here? Well, this is the trading range that we've defined. So clearly we'd like to sell. I get a little tiny short-term range high right there. You get kind of a lower percentage range high there. You know, it's a good-looking range high, but you know, I would rather sell that 49.29. I would rather sell that high. So I can sell the 48.18, sell the 48.70, 49 even. I can sell 49.29. And if we happen to get up top here, 50.58, 51.12, okay, looking to sell these highs. We've got targets waiting for us down bottom, 46.49, 46.18, 44.81. That's just simply your range target. And then if you look closely, you get a measured move target down here at 44s. 44 just has a great ring to it, doesn't it? It just does. 44, man. And of course, a projection target down there at 42.57. 42.57. Boy, we've been wondering the past week and a half here, right, if the oil prince of Saudi Arabia, if he really was kind of projecting down to that 40. We'll see. We shall see. They told us 40 a few weeks ago, and we're continuing here to sell this sucker short as we get down towards that $40 a barrel. Okay? Now, here's an interesting chart. This is the chart that you can see here. From last night's newsletter, there were literally 4 examples here. You had the first one early in the session, middle of the session, late morning, late afternoon, right? There are 4 examples right there of easy selling opportunities at the exact same levels I gave you last night. We're going to keep doing that, right? We're going to keep doing that. So what we're going to keep doing here is, now this trend line, I really should extend that out because we'll continue here to keep selling at the trend line, keep selling at the 48.15, sell the 48.78, right? Keep on selling, keep on selling. And again, don't forget that trend line. That trend line, I should have extended out a little bit further there. I'd love to see a lower low, go back, retest, and sell it short. We've got targets here at 47.06, 46.74, and 46.35 on the way down. If you're looking for that longer term target, you can use my 32, that $44 a barrel, 44.81. You can use those for targets, or you can use these for targets. Here's my price action chart. So here is a very interesting chart on crude oil. Now again, take this chart and just look at this chart. Pretend for a moment you don't know that we went from 100 to $47, $48 in about a month. Forget the fact that we have a long-term bearish trend. Forget the fact that you were able to make a killing this week already, just simply selling resistance levels overhead. And just look at this chart. We've got higher lows, so we're definitely got a twinge of bullishness on this. But then we look a little bit closer. We have, in fact, we can go all the way back here. Lower high, lower high, lower high, right? So it's really difficult for me to say we're bullish, right? My mouth jams up when I'm trying to say the bullish on crude. It's just like, no, it's not. No, it's not. What you must be mistaking, Joe. This is not a bullish market right now. But, you know, all kidding aside right now, though, if we had some higher highs, I'd be all over this to the bull side. But we don't. All we have is some higher lows. So higher lows, lower highs, we're going to call this neutral. Okay, with that, now you're seeing this is where you've got your buy here, 47.08, buy here, 46.64, 46.45. But one thing about the buying, if you're going to buy crude right now, you've got to do the exact same thing I told you on the Russell. Tight stops, tight first target, get that profit on that first target, and then put the second target up at the high, right? So put a second target up at the resistance levels overhead, whether it be the swing levels or the top of that little wedge. And remember, lock up that profit quick, because what you'll probably see it, right? Bounce off this, give you a little bit of a buy, but then watch out. It can just rip your head off here as it drops. So if you do choose to buy right now, and there is a good reason on this to be a buyer in the short term, but just remember, though, to practice discipline and patience to wait for the proper buy trigger, and then take that profit quickly, tighten up that stop, get rid of all that risk, protect your capital. And if you can find a way into we'll find a way tomorrow morning, that's for sure. Depends on if we get there or not. If we get up towards those highs, or if we come in tomorrow and we find another range high, right? This is not the last time we're working on this chart. I'll be updating these charts for all of our students tomorrow morning at 8 a.m. Eastern time when we open the trade room. If you get into a short trade, let that sucker run, right? Let that sucker run. Do whatever you can do to stay in that trade without additional risk. All right, guys? Really, really great day today. Really great day. This price action in 2015, it's been incredible. All right, guys? And remember, you don't need to go at this on your own, right? As a day trader, experience is so valuable. And I would love to share my 14 years of experience and all the skills and tools that we've built for our students here at School of Trade. Guys, don't forget, before I wrap up here this evening, don't forget to download today's charts, grab your free pass, register for the nightly newsletter mailing list, and if you happen to stumble over here to SchoolOfTrade.com, don't forget, we have the absolute best free trial in the business. I'm going to teach you more in 1 week for free $99 than you're going to have to pay thousands of dollars for. I get email after email after email from our trial members saying how much they love the trial. I would love your feedback. And hey, if I happen to be wrong, if we're not the best trial you've ever taken, let me know. I would love to know. Because last time I checked, we are the longest running, most successful, fastest growing educational community on the web for day traders, and we got the best stuff in the business. I'm not gonna tell you anymore. You can see for yourself. Check out the free trial, and while you're there, 3 levels of membership, and we've got someone standing by here 24/7, 365, right, on live support if you need any help. My name is Joseph James. Hope you guys had a great day today. Don't forget, tomorrow's Thursday. We got inventories tomorrow on crude oil. I'm going to walk you through it in real time. Come out and see me. I'm opening my trade room tomorrow morning at 8 a.m. Eastern time. I'm out of here for now, boys and girls. Same time, same place tomorrow. Adios, amigos. Bye-bye for now.